Good afternoon, everyone, and welcome to another edition of Bleeding Crypto's Market Update. It's been a little while since I've done one of these. I've been away on vacation to Seattle a couple of weeks ago, and then I just got back from Puerto Rico a couple of days ago, so I had a lot of catching up to do as well. So I haven't updated my YouTube channel in a couple of weeks. So I just wanted to give you a video today. Today is a perfect opportunity for that video. Taking into consideration the market conditions in the past couple of days and how things are looking. So I thought it'd be a great time to maybe calm some of the nerves of people of doom and gloom and of it's over or we're going to all-time high in the next couple of months. So just to get a realistic expectation of what I'm looking for. It doesn't mean that it's right, but at least it gives you an insight of levels that I think are really important to be looking for. And of course, with every level, there's always an invalidation, and we'll cover those as well. Let's see. Let's go ahead and we'll use. We'll use this chart here. Let me just go to the higher time frames. I don't think I have much on here. I like using the clean charts with you guys so that it isn't so messy. Let's see. Let me try a different one here. No, not that one. This one may work. Actually, I'm just going to start a brand new one with you guys. This one here, this was a pretty cool chart. So this one here, just to give a quick description of what this chart is. I basically took the low and the high, and I cut them down into different quadrants. So I split this in half, and then I split that in half, and then I did one more half. And I like to stay, when I'm scalp trading, I like to look at the macro view within a range to give me a perspective of which way I think things are going. So for instance, let me show you this example. I'm paper trading this right now. So this, when I'm scalping in the 30-second, 1 minute time frame. When we're ranging or when we're slow bleeding, it's easier to scalp both the longs and the shorts. Now, when we have a push down the way we just did right now, and the market is trying to recover, I don't know the strength of that recovery. So what I don't want to do is trade against the grain in an upward market. So for instance, I took this paper trade here so I can measure how well the oversold RSI indicators are helping me to come up with a plan of when I should long and when I should short. So typically on something like this, I was tempted. This is a paper trade for a short trade. Now, in a ranging environment, I know that I can rely on the overbought conditions to bring me back down to the oversold conditions and get myself a nice scalp using an appropriate leverage to get me the result that I want. However, what I don't want to do is I don't want to short inside of an environment where we are recovering. If this bounce has a lot of force, I would be more comfortable to long the drops versus short the pumps, if that makes sense, because the trend may be working towards the upside and can work against me. Now, when we're ranging, it's much easier. So prior to this dump that we just finished having the past couple of days, it was gravy because it was a very slow bleed that you can count on with certain conditions that that met for me to take the scalps to the upside and scalps to the downside. So that helped me a lot. But in this case, like I mentioned before, I need to measure first what kind of force we're dealing with as far as the recovery. So here, as you can see, this is where my paper trade would have started, and we haven't done much. So on typically something like this, I would be looking for a little bit more of a pullback, and we haven't gotten that pullback just yet. So I could have been, very close to, to break even when you consider the slippage. When you open a trade, guys, if you're not used to leverage trading, say you want to open a 23, you pull the trigger and you hit confirm at 27,375. That's not really your entry. Your entry is going to be a little bit lower than that. You got that slippage. So right away, when you enter into a short, you're in the negative. Typically in the negative about $5, $6. But quickly, because depending on the leverage you use, if you're using a 10x, 15, 25x, you get out of that very quickly if it goes in your favor. So far right now, it is working out. But I took this paper trade on this candle here. on this candle here. So look how long it took for it to come down. And again, this type of observation, for lack of a better word, is kind of what it's intended to do. Let me measure first the momentum, and then I'll start my trading, my scalping back up again. Until that happens, I don't have a lot of confidence to short it. I'll have a lot more confidence to watch where this goes down. And also, I'm going to do the same thing. I'm going to paper trade the pump. Is this a pump or recovery? We don't know. We can continue to go down. And if that's the case, then obviously I don't want to get caught on the wrong side of that. So it kind of works both ways, right? For paper trading, big drops the way we just had, to kind of just get a pulse, a sense of what's going on with the momentum of the market, if that makes sense. Hopefully it makes sense. All right, so let's go to let's open up a chart, and let's see here, new layout. We'll just do a new layout, and we'll go to the higher time frames. Let's see, we'll use Binance, just because actually no, I'll use Bitstamp for now, because I have a lot of notes on Binance for my personal stuff, and what I don't want is, if I change it up here, it may change those. But no, this is a new layout, so it shouldn't do that. No, I'll be fine with that. Never mind. BTC, USDT. Since it's a new layout, it shouldn't be linked. My notes, my reminders will be linked, but not my notes. So, all right, let's see here. I'm getting a little bit, I'm getting just some alerts right now that we're getting a little bit of a drop, but we're still looking. I'm going to be going back and forth with you guys, just because I want to keep an eye on the market. Excuse me for 1 second. Let's look in here. We'll look at the paper trade one here. I just want to keep an eye on this here. I want to see, excuse me, I want to see if we lose these lows, crossing down. I use a lot of alerts, a ton of alerts. It just helps out a lot. Okay, let's go. What was the chart that I was using that I cleaned up? Oh, there it is. Okay, so let's do this. Let's start with the weekly time frame. Weekly time frame, and let's get rid of the volume. We don't need the volume. We're just going to look at strictly price action for now. And here is a perfect example of why it was a good idea to make this video. Look at the candle that came in. It's not that impressive. When you're looking at the smaller time frames, it looks like doom and gloom. But when you look at it, when you zoom out into the weekly time frame, you can really see it kind of just it's right there in par with some of the other candles that we have, both green and red candles within this area that we've been observing for the past 6 to 8 months. So nothing out of the ordinary. One of the things that does strike out to me right away is that we are working on a bearish engulfing candle. We still have a few days to go for this candle to to close. And all right, I just got another alert. And so I'm not really too concerned about it. So let's do a quick recap of what we've done from the bottom. So from the bottom, we put in a low, a high, a higher low, higher high, and now we're working on a higher low. That is the assumption that we have to take right away when we look at this. We cannot think that this is over and all of a sudden we're going to retest the lows. That's not how it works. You have a market structure that broke a trend, reversed the market, and until it proves otherwise, this is exactly what this is. This is a reversal. Now, we've been talking about, I've been talking about these lower highs in previous videos of last year, and I wanted to see these lower highs get taken out in order for me to flip my bias from seeing 0.886 as a retracement point to an invalidation. When we broke through this candle, like I had mentioned before in the previous videos, this confirmed the reversal of the trend. It broke out, and it broke out in a way that was meaningful. So had this barely broken out here and not much thrust, not much follow through, it's not a very convincing breakout. Just like this here wasn't a convincing breakout, and we ended up coming back down. This here was a much different story. So this reversed the trend for me. So between wherever we land and this higher low is what I'm looking for, somewhere here. We have a lot of room because we had a lot of thrust to the upside. So it gives, you have quite a bit of a wiggle room. Now, I like using two different fibs to measure what is the potential of what we're going to see. So the first thing I'm going to measure is going to be the continuation rule. The continuation rule for me, if you like using the Fibs, you will notice that when we have a breakout and we come back before, like putting in a flag, for instance, for a continuation to the upside, we typically bounce off one of two Fibs, 0.382 and 0.50. Look at where we're at. We haven't even hit the 382 yet. So we could hit here, the 382, or the 0.50 and continue. No big deal. This here is typically what we don't see. We don't see just a straight candle. We usually see a little bit of price action, little bit of give and take, but it doesn't mean that it can't happen. So this here is going to give me the first indication of whether we're going to see a deeper retrace and a consolidation. So what I'm looking for is obviously we need to hold the 0.50 fib. If we hold the 0.50 and we land here, I'm going to go to lower time frames and I'm going to start looking for some bullish structures here to indicate maybe a double bottom or maybe a descending wedge that gives us that potential structure that we need to break up and continue to the upside. Now, if we break here, does it mean it's over? Nope. As long as we hold, what is this here? 19,549. As long as we hold above that, it is technically a higher low. The moment we break that, we now break the upward structure, the low, high, higher low, higher high, higher low. So that is the structure that we want to make sure we keep intact. So what I do here is if I break this, no big deal. I go down to my reload area and I look at these Fibs. Now these Fibs, typically when we land on this box here, and these are three Fibs that I use, 0.618, 706, and 786. When we land inside of here or on top of here, it's more of a consolidation versus a breakout of the Fibs. So before I look for a hit breakout, here I look for a consolidation. Let me show you an example. Here's an XRP chart. This is a perfect example. We came down here into the box. We didn't break out right away. This is a 4-hour time frame. We hung out here for half a day. We broke out. We came back. We back tested. What did we put? We put in a double bottom, a bullish market structure. Then we took off. So I'm kind of looking for the same thing here. If we come into here, it doesn't mean it's going to spring. It means I'm looking for some sort of consolidation, whether it be a consolidation, just a straight range, whether it be a double bottom, whether it be, again, a wedge pattern or maybe a little bit deeper inside of this box. Whatever it is, typically this box means a slower reaction to the drop. It's not going to be a spring reaction like it typically would from a 382 or 0.50 fib. So that gives me more time. I go down to lower time frames, start looking for those setups, so that I can have a little bit more confidence in my trade. So if I'm going for, say, for instance, a double bottom, one of my favorite patterns to play, I call it a W. The W flag breakout is something that I play quite often, and I show a lot of my Discord members that, and we actually play that pattern very often, which is here. Let me go back here, right here. So we have a W. Typically, the W ends right here at the candle body of this here. This one ended up a little bit lower. It'll flag and then it'll break out. That's what we call W flag breakout. This one ended up a little bit lower. Doesn't mean it's invalidated. It's just typical. It's not your typical W flag breakout that I like to play. But when I see that starting to form, I have more confidence that when the right side of that W, so when I see the peak forming and I see us come back down, I'm watching intently. And the moment, and you can play one of two ways. If you're comfortable and you're confident with your TA and with the structures and you recognize them, you will play it at the touch of the right side. Or you can play it safe and play the breakout neckline. So you basically buy it when it breaks out of this neckline. You can then buy it. And like I said, typically this goes a little bit higher. And when you come back to form that flag, typically the flag doesn't break the neckline. So you can play it a little bit safer, get it here, Watch it here. When it comes back down, you'll see a spring effects, and typically this spring here is a 382. Sometimes 0.50, but typically it's a 382. Doesn't quite reach the neckline on a 382, but it gives you that spring and again that confidence that you recognize that market structure and you can play it and make some money. However you want to play conservatively or aggressively, that's all up to you and your risk management. But I just want to kind of explain my thought process and what I look for. All right, so let's go back to Bitcoin. So if we come back in here, we are still within the range of creating that higher low. Now, we have a very important area that I have my eyes on. I've talked about this before, and it's actually a little bit before getting it'll come a little sooner than that 382. And it's going to be this area here. Why this area? Back in August of 2022, we formed this tweezer top and we hit this resistance wall. We came back 6 months later and did the exact same pattern. And when I mean the exact same pattern, I'm talking about same tweezer top, same size wicks, same size candle bodies. I mean, this is just a perfect example of backtesting a resistance wall and rejecting. And then this is, again, a perfect example of what you need to look for a convincing follow-through breakthrough. Even when we broke it, we never back-tested this. I've been waiting for this to come down and back-tested since we broke this back in March 13th, the week of March 13th. So it's already April 21st. So over a month ago. Wow, it seems a lot longer, actually. I was going to say a few months ago, but no, it was only a little over a month ago. 5 weeks. 5 weeks. So we haven't back tested. So seeing this candle here, it's not that big of a deal. We are still in an uptrend. We're still in a reversal trend, in a reversal market structure. Nothing has changed. It only changes when you start invalidating those areas. So area number one for invalidation, well, not so much invalidation, but areas to be concerned about. If we blow through this, and we find no support, that would be a major red flag, because a resistance of 6 months that played out this perfect should hold the price, at least stop it for a little bit, maybe get a little bit of wick action, and maybe consolidate. Even if it's going to break, at least you'll see something of that nature. So if this blows right through it, that is red flag number one. Okay, no big deal. It came through. Maybe we got some bad news. Maybe there's a lot of fear in the market. Fine. We still got our trusty box here. Now, if we blow through here and we break this, that is warning red flag number two. That is something to really, really pay attention, because now the only thing that's going to save us, that's going to save the structure from being invalidated, what I mean, the reversal structure from being invalidated, is going to be this wick right here. And this wick, let me show you this here. Excuse me. Give me one second. I got a cough. Hold on. Oh, sorry about that. Okay, so let me change this color just because I'm a little anal about my colors on my here. All right, support. All right, perfect. Now, this wick didn't happen by accident. This wick, if you look to the left, look how perfect this lines up. I mean, you can't, this should be an Investopedia. This really should be, because this is a perfect example of what classic support and resistance is all about. It fell right there. I mean, that is, I like to call it TA porn, because it's just so beautiful. So this here, if we break through here, then we can start talking about lower targets. Until that happens, there really is, it's pointless to even consider anything down here, because this here will then invalidate everything else. It will invalidate this reversal structure, and we will start talking about a whole different slew of things of what we need to look for down here. But again, we're not going to talk about that in this show, because it really is no point. So what am I anticipating moving forward after this week? Well, first of all, we got to wait to see where this candle ends up when we close it. Can we end up here and not come down in here and test this? Absolutely we can. I would like to see this. And the reason I would like to see this come down here and touch this here is because this here, again, was a very important area that we never back tested. And I want to see my target of $48,866 hit. And for those of you who haven't seen my video, my prior videos, I'll show you why that price to me is significant. I'll show you real quick here. That's the low. That's the high. Lower high. Okay, right here. This is why. On Binance is actually a little bit lower, 48,627. I think on Bitstamp it's 48,867. Well, anyhow, 48,000. We'll just call it 48,000 for the sake of the video. This underside touch of 618 is a very typical lower. Again, this is my lower high rule for a reason. I have it right here, lower high rule for a reason, because this is what I look for when the trend is over, when we're back testing, when we're losing a top. I don't know if we've lost a top. I don't know if we're just coming down into, if we're just doing a normal retrace and pushing forward. So what I do is when I think there's a top, I find a swing low, I measure it up to that top, and I wait for this. If we come back here and we reject off of one of these three, and the reason these are colored is because typically we see a 618. Sometimes we see a 706. Rarely do we see a 786, but it's still possible. That's why I put green, yellow, and red as this is the most common one. And this is what we did back in 2019. We went right up to 618, and we came down June of 2019 from the 2018 bear cycle. And this would create a lower high from the high that we had of $69,000. And it would still, like I mentioned before, be within a bear market structure. High, low, lower high. And that is where it gets a little tricky. I don't think if we hit here, we're going to see a lower low. I really don't. I think we're going to be very similar to prior market structures when we've tagged the underside of 618, and being that we're so close to the halvening, we're going to look for a retrace of a normal fib. So for instance, I would be looking for something like this here. All the way to the bottom. Actually, let me take this one off. And let me take this one here. At that point, I would be looking for an area inside of here to hold. Very unlikely that we break through here. We may break maybe down to 886, which would be the next box down below. But I'm not looking for the lows. I'm not looking for anything lower. Again, unless we get a black swan event that we're unable to map out, we're not able to chart that. We can't use that as an analysis. There's no respectable trader who's going to sit there and say, okay, if a black swan hits, we should hit here. It's impossible. He doesn't know what he's talking about. So until that happens, we don't have that data. We've got to use the data that we normally use to come up with our trading strategies, and that's going to be, these types of levels. So that is what I am basically looking at for a continuation, guys. There's nothing until we get invalidated here. There's no reason why I have to believe that $48,000 is not in the cards, because like I said, this drop is, look, it's nothing. It may seem like a lot. It's a total of 9.98%. That's it. 10%. It's a $3,000 drop, 10%. Yeah, this reversal candle was 27%. Just to give you some context, 27%, $6,000 candle. This is half of that. Half of that. Actually, less than half of that. So again, no reason to get all worried about the run is over. We're still in a trending market, and the trend. What am I doing? Oh, the trend is still up. This is just normal, healthy retracement that I'm looking for. Okay, so let's look at just a couple of local levels. Excuse me. So here is one local level that I am looking at right there. So here is going to be, and I'll explain to you in just a minute. Let me map it out. First of all, we have these wicks here as support. But if you look to the left, look at these candle bodies. Look at this wick. This is a very, very important level. And again, these wicks did not stop here by coincidence. They didn't just pick this area out of a hat and say, this is where I'm going to stop. There's always a reason for it. And it's your job to find out the reason and try to put it into context to see how we can help you later on. What does that mean? Well, knowing that this was support because of this area and because of this area, see how all that starts to strengthen. The more you touch an area of support and resistance, the stronger it gets, the more validity it has. So as you're moving forward, you can now trust that this is going to be a strong area of support, and more often than not, it'll at least pause any type of dump that may come. Doesn't mean it's going to hold it and it's guaranteed to hold the price action and continue. No, but it at least gives you a target. So if you're trading or you're scalping, it's a good chance that you can exit here, and you're gonna get filled, or you put your order there, or you want to exit somewhere. This would be probably a really good area to exit, and then you can reevaluate whether you want to continue shorting or whether you want to play the scalp long bounce to maybe like a 9 EMA or whatever your strategy is. But again, my point is that this is an area that's going to help you later on, and even much later if we ever break it, and I'm sure we will at some point. When we come back to it from the underside, it's going to matter. Again, for trading purposes, if you're a day trader or a scalper, you're on a long, you want to find a good target. Tell me you see this support line here. That's not gonna be the first thing you look at if you're inside of this area here and you're trying to find a target. That would be my first area of resistance. Doesn't mean it won't blow through it, but you might see a wick candle body close here. That's gonna be the most typical scenario, or just complete breaks on it. It'll be a complete break. Very similar to here. Look, we had a candle body close, wick up. We came to it, candle body close, wick up. Very similar here. We can have a candle body close here with a wick up. But the point is that you'll have a good target that you can trust and you can rely on, and it's going to play out more often than not. All right, so let's see here. We covered what we're looking for locally. We're looking at the weekly time frame. So let's dig in a little bit more. Let's look at the 12-hour time frame. It's one of my favorite time frames to use. And we're going to zoom in. And there's really, actually, to be honest with you, there's not really much to cover. Let's look at some of the indicators. Let's look at. Let me put my tools on. Let me look at my tools. So we have the RSI has reset, oversold. Basically, if the 12 hours oversold, that means everything else is oversold. So we don't have to worry about the here. I'll take a look just so you can see for yourselves. See, there's no need to do that. But I just wanted to show you just for your own knowledge. So now that's my go-to time frame. I love the 12-hour. It gives me a good sense. A medium between the high time frames and lower time frame. My 12-hour has been my go-to for years, so it gives me just a quick pulse of the market. Now I go to the daily. I want to see, has the daily MACD reset? Typically, we don't continue when the MACD is halfway or 3/4 of the way from resetting to the middle of the volume oscillator. That's really important for me. For those of you in my Telegram group, we've been covering XRP and we've been looking for that daily reset. And I told you it would be very unlikely we continue past the prior high, the prior swing high until that MACD resets. And there's been a couple of attempts, but they've all been rejected because we weren't ready. You have to have patience with these markets. So let's look at here because I actually haven't looked at it. Okay, there we go. We're still not there yet. Look at that. We have a double top on the MACD. Look back, guys. When the MACD has, and again, I'm before I explain what I'm looking for those of you who are listening to me and say, "Oh, the MACD is a lagging indicator." Yes, it is. But if you know how to use it correctly, it can help you with your analysis to give you an idea of the momentum. And when you have an idea of the momentum, you have an idea of the way momentum works. So for instance, when you have a top out, you may have a deviation and put in a lower high, but you're not going to get a breakout from the halfway point here or from the two-thirds of the way down, typically minimum here or below. A proper retracement normally goes below the medium, the neutral point of the volume oscillator. So for instance, here, prior to this dump, we were here. And if you listen to my last YouTube video, put it on 2x speed until you get to the area where I talked about this. We didn't have this. And I talked about this. And I said, listen, guys, I know everything looks bullish. I know it looks great. Everybody wants a continuation. But this here is probably going to resolve like this. Please go back and fact check me. Don't take my word for it. Go back. As a matter of fact, for those who are learning TA, want to learn TA, it's always better to listen to the old videos, not the new videos, because the old videos are showing you what we're looking for, and then you get to see the real-time result of what we're looking for. And that, to me, when you're trying to learn, speaks volumes, because I can sit here and tell you all day long, oh yeah, this has to go, this has to do this, this, and this. But if it hasn't played out yet, by the time it does, guys, crypto is like dog years. One day, it feels like 7 days. So it doesn't, you kind of forget, and the power of what I'm saying is not going to hold as much weight as if you heard it 3 weeks ago, and then, or 2 weeks ago, and then you look back now and you're like, oh, wow, that shit is incredible. Here, everyone thought we were going to continue. And I said, listen to the video for what I said. Very unlikely. And we did this. Remember this? For those who watched the video, we did this. Look, all you have to do, guys, look to the left. All the answers are to the left. You have a cheat sheet right here, guys. A cheat sheet. You want to know the answers to something? All you have to do is look left. It'll tell you everything you need to know. Look, same pattern. When you top out, you may get a higher low. Excuse me, a lower high, but you're gonna roll over. This didn't reset here. Look at this pattern here. Beautiful head and shoulders on the MACD. You want to tell me the MACD is not a useful indicator? All right, go ahead. Don't use it. But if you want to use it, you want to have some confirmation, take a look at this. Look at here. Look at this. We put in a lower high, and yet we rolled over. We even put a W, a very bullish pattern. And did we break out from here? Absolutely not. Until we break or hit the medium line, very unlikely that we're gonna move forward. Here, look, we got this one here. We got close to the medium, we got a little bit below the medium, and we started to move up. But typically when we have a run, look, each one of these ends way below the medium line. Look, very, very unlikely that even hitting the medium line is enough. So the drop that we're having, if you understand the context of the MACD, and you understand, and you're taking, and you're removing your bias, you're removing your fear, you're looking strictly at price action, strictly at market structure. And if you trust the indicators, in this instance, I trust the MACD, I look at this and say, yep, not ready. Not ready. Now, does this mean that Bitcoin needs to fall? Absolutely not. There's two ways a MACD resets, and I think that's probably true with most indicators. Well, for the MACD, we're talking about the MACD. The MACD resets two ways: with consolidation, meaning you have to be patient, and if it's just chopping away, this will slowly grind down because the momentum is dying. It's very, very low. That way of resetting the MACD is torturous. Absolutely torturous, because you want it to reset, because you understand that until it resets, you're not going any further up. And excuse me. So it's killing you. Easiest way is this. When you see these drops, you're like, yes, finally, get this puppy down, reset it, let's go. Which is, again, why you shouldn't fear these drops. These drops are healthy. They're here for a reason. They allow the oscillators to reset much quicker and get the show back on the road. And you notice the position of the MACD of where we're at? Look at the position of the MACD. Look at the turnarounds on prior retracements, on big moves here. We're not going to talk about this because this was the bull run. So obviously we're not in that type of environment. We're more in here. We're more inside of here. These little runs here. These little runs here. So if you compare apples to apples, and you look at these runs, look where a lot of these go. They go way below here. So when you look at the price action now and you think, damn, I really want to get this thing over with, you want it to go deeper. You want it to fall even more. If you want this to turn around quickly, then you're rooting for this to come down to 25.3. You're not being negative. You're not being a bear. You're understanding that in order to get the show back on the road, you're not going anywhere with this here. And if you don't believe it, hit the MACD and look to the left and show me when we have begun another run without the MACD resetting. See if you can find one time. And again, it's all of a learning process, and this will help you understand why when we see this and people are cheering on, traders are cheering on, it's not that they're fudding. One of the guys that I follow, Johnny Wu, he posted he was angry because somebody called him a fudder because he's been warning about a drop. And again, a trader like Johnny Wu, he's going to understand the benefits of this. He's going to understand the topping out. He's going to understand these moves with no retracements. Consolidations are good during moves, but they're not going to give you that thrust. Look at this consolidation, for instance. Look at the difference when you consolidate and when you drop. Consolidation, we went up barely. Consolidated again. Again, we tried. We ran out of steam. Nothing. But what happens? What happens when you drop? Look at the thrust. And this thrust very rarely comes from something like this. It needs to come from something like this. Again, like I said before, think of this as a rubber band. You're pulling that bitch all the way down and you're letting go. Here, you're just twirling it on your fingers. It's not going to go anywhere. You're throwing it. That's it. You're just throwing it you're flicking it with your fingers. It's not going to go very far. So this is why these types of moves are really important, especially if you're a bull. This is important because if you're a trader, you understand the significance of this. Let's see here. Is there anything else I wanted to talk about? Hopefully I covered that. I covered the local, the macro view, where I'm looking for this to go down. You know what? Let's cover XRP, since I actually posted this on my Telegram. If you guys want access to my free Telegram, hit me up. Send me a DM. Be more than happy to give you access to the Telegram. It just has a lot of information as far as HyBlock. You know what? Let's do that. Let's look at HyBlock. Let's look at HyBlock so that you can have an idea of what the market makers are doing within a range. Or within a fall, or when we fall, where are they typically looking? Actually, no, I'm sorry, erase what I just said. Not during a fall, because this has been really accurate for me. So I've been scalping the hell out of the price action, mainly in part for the data in HyBlock. So let me explain to you what I mean by that. And if you guys want to sign up for this, I have a referral link on the description below with the video. You can click on that. You get actually 15% off the monthly charge. I don't know if it's just for 1 month or if it's moving forward. I just know that a lot of people who sign up with my referral link have said, hey, I got 15% off, but I don't know if it's month after month or if it's just the first month. Anyhow, you're going to save some money, and I get to save some money as well. That was always a good thing. We have more money to trade. Okay, so let me zoom into a little section here, and I'll tell you how this has helped me. We'll zoom into this bleed out. During these moves here, guys, when this drops, these bubbles are basically contracts. And these are whales piggybacking on these drops, trying to maximize and trying to make some money on these drops. And when we drop, what does the price action do? Let me show you. Let me show you this. Just right here. Just right in here. Right in here. Look what happened. We were dropping. As we were dropping, this guy said, you know what? I'm smart in the market. I'm gonna make a killing. He opens a 150x contract worth $202.53 million. This one, $23 million. This one, $38 million. This one, $150 million. All 150x. This one, $23.68 million. As it's dropping, the market says, you know what? They came and took all these out. I'm not going to keep on dropping. We would like to go down. We would like to grab these contracts here. These contracts here are 38 million. What is this? 100 million, 113 million. But you know what? If we go any further, we're going to have to pay out these guys pretty big. So what do? Boom. They bounce and they take these guys out. Now, how is that helpful to you? I'll tell you how. When I see these pop up, I look at certain conditions on my trading, on my oversold conditions on my oscillators, and I open scalp longs. Open the scalp longs. What are my targets? Right here. Right here. Does it mean that it's going to go exactly to there? No, look, it went up here. Look, it went a little bit higher. But you know what? I've told you this before. When I scalp and I trade, I never try to think I'm smart in the market and get the very top, and I'm going to get the very bottom. Not at all. I'm getting the meat. But these are small moves. So how much meat is there? That's where leverage comes in. The higher the leverage, obviously, the more the small meat's going to count. So just let me give you an idea. 0.4% might not seem that much, but on a 20x leverage, that's 8%. That's an 8% move. Or a 10x leverage, it's a 4% move. You do that shit all day. This is a 1 minute time frame, guys. You do that shit all day long, that adds up very, very quickly. And having this information gives me the confidence of taking those trades. Do I have a 100% strike rate? Absolutely not. Sometimes they don't go down and touch it right away. And you're thinking, okay, here's a perfect example. See this contract here? 43 million. Look, this thing's going down. Why did it go down? Because it was taking this contract out. Look, this price action came down, took this contract. It stopped right there. Look, let me show you this. This is fucking thing's incredible. Look at this. It stopped right there, didn't grab it. What did it do? It went up, put in a double top, and then it grabbed it on the second try. So if you're playing here and you see that the price action did not touch it, you got to react very quickly. That's why I said the 30 second and the 1 minute time frame. Because if I'm watching this and it starts to pull up, I want to take that. I'm out. I'm done. I'll try it again. And when you understand that every single one of these is not going to hit, then you have a better understanding that, you know what, that might be your target, but that's not necessarily where the trade's going to end. You may have to cut it sooner. So again, I'm not reaching these bottom. And by the time I cut it, you think I'm cutting it at the bottom of this candle? No, I'm not that. Maybe other people are that good. I'm not. I'll end up cutting it around here. You think I entered here? No, I entered here. Here. That's just that for me. That's the reality. I'm sure there's guys out there that catch this and catch that. Good for them. I'm not there yet. Maybe someday I'll be there, but I'm not yet. So this meat right in here is what I go for. These, however, are starting to affect me less and less because I'll enter here. Like I said, it's very hard. Sometimes I do snipe the top. But again, I will 100% admit it's luck. It really is luck. When I do snipe the top, it gives me a little bit more wiggle room. But since I don't snipe the top most of the time and I'm entering here, when I see this, and you got to understand, guys, I use heavy orders and leverage, it adds up real quick. You're catching up to your entry very, very quickly. And the moment it breaks even and it goes the other way, you're starting to really add up that amount. Today, I got really upset at BitGet. I never noticed the fees that they charge. And I should have started my video saying this. Do not use BitGet. They are a ripoff, a complete, utter ripoff. They charge you $129 per contract. The same exact amount of money I trade on BingX, I pay $40 for that contract. On MEX, I pay $20 for that contract, the same amount of contract. So it's like, well, it depends on the amount. Nope. I play a typical, my go-to amount is 100,000 10x. That's what I play 90% of the time. When I'm really confident, I'll do 200,000 10x. So 100,000 10x on MEX, you pay $20. On BingX, you pay $40. On BitGet, $129. That is fucking insane. Never use them. That is a ripoff. So just and their platform is not even that good. Like for instance, what I don't like about them is that when on Bing and Mex, if you're in a trade, when you open a trade, you could hit the edit button and put a target price. If you didn't fill the target price when you open the order, you can do it after the order is already open, and it gives you a box to put the target price and the stop loss. Now, I don't use hard stop losses at all because they will 100% come and knock me out. So every trader is different. Some people say that's irresponsible. That's fine. If it works for you, great. It doesn't work for me. I don't use stop losses. I use alerts, and I call them soft stop losses because those alerts, and I put a shitload, guys, a ton, like every $10. So those alerts is what gets me to get out of a trade, not a stop loss. So they give you, Bing and Mex gives you the ability to put in a target price, leave the stop loss empty, and then hit confirm, and then it'll add that to your contract. On BitGet, it doesn't. It won't allow you to put a target price unless you put a stop loss. They force you to put a stop loss. You know why? Because they want to liquidate your ass. They know exactly where your stop loss is, and they will turn that around and grab it from you and take you out of your contract. That's what these guys are, the casinos. Remember, never forget that. They're not your friend. They're the competition. They're there to take your money. You're the guy in line at the casino, just waiting to hand over your money, and they're there to grab it. So you got to do everything in your power to keep them from taking your money. And the first thing you want to do is look out for those fees. They are the biggest ripoff in this industry. Probably the equal, and I was going to say second to Coinbase, but no, Coinbase is just as bad. I saw somebody posting that about trading fees. Actually, Coinbase is worse. Somebody posted, I forgot who it was, that the fees on Coinbase he paid $700 in fees because he wasn't using the advanced trading portion. He was using the regular standard. $700 in slippage and fees. That's fucking crazy. So be careful out there, guys. These exchanges they're not all the same. So you want to be very careful. And I'm not telling that because I have a referral link for Bing and Mex. I'm not even telling you to go use them. Don't use them. Don't use mine. I don't care. I just want you to be aware of the ones out there that you want to avoid, and that's Coinbase and BitGet. What else? Okay, so I was talking about this here. I went off the rails. I just got so upset today. This has knocked me out a couple of times. So this is where your conviction and your understanding of HyBlock. Well, it doesn't do it as much anymore, to be honest with you. It used to do a lot more in the beginning. Again, because the more you live through it, the more you see it, the less it's going to phase you. These here, when they pop up, in the beginning, I used to be like, shit, it's stringing around on me. Forget it. They're not going to go after that contract. Always remember, guys, when this stops here and it starts going down, 9 out of 10 times, I open up my HyBlock software. Well, I already have it open. I just refresh it. And boom, I'll see why. And it's a target. This was a target. So I know that these here are areas that they're going to want to hit. So that's where my target is as well. So trust. Don't get yourself knocked out by seeing this. It never goes down in a straight line. Every single time it wants to grab a contract, it will push up, and this should actually give you the signal that it's going to go down. This is a great, actually, that's how I usually see, when I want to add on to something, I'll add on this impulse here. Because I know that every time before it goes hits a contract, it does this. It pumps up. Look at here. This is falling, right? Look. It didn't grab there. What did it do? It pumped. This pump, signal, add to it. Boom, they took it out. And it does that every single time without fail. So use their scare tactics to your advantage. So, all right, guys, I think that's pretty much it. It was supposed to be just about Bitcoin. Liquidation heat map real quick before I end. Oh, actually, I want to show you the spot heat map. That's important. Liquidation heat map. Signatures above, not guaranteed it's going to go there. So just keep that in mind. Even though this is heat up here, it doesn't mean it's going to hit it, especially with such a big downtrend. No one's stepping up to the plate. Be very careful. So that's what it looks like now. A lot of the heat has gone away. This morning, when I updated my Telegram group, we had massive heat signatures to the top, massive signatures to the bottom. These guys got paid. They got paid big time. These were the short liquidations right here. That's why they're not intense anymore. Massive. They all got paid because it dropped. All shorts were paid. All longs were wrecked. We had 2 massive heat signatures on top, 2 massive heat signatures on the bottom. So for you guys that are in my Telegram group and are listening to this video, what did I say this morning? We're in the middle of 2 intense areas. There's no bias. No bias at all. It can go either way. And this time they chose the bottom. And that's why you see, look how less of the heat on the map you see opposed to what you saw this morning on the Telegram channel. Okay, so let's look at spot. Look at spot, guys. They put a very large buy wall for 795 Bitcoin at 26,650. How does this help you? It helps you because then you take that 26,650 and you do this. 26 here. You go 26. You know what? 26. I don't want to do this here. I'll do it on this one here. Actually, I'm just going to do this. Here. 26,650. And then I like changing it to yellow. And then I just put a quick description. Spot heat map. Boom. So, what does that tell you? Look at that, guys. Again, nothing is a coincidence. There's always a reason. Everything rhymes together. Everything comes together in a perfect harmony. Look at this. Come on, you guys. I shouldn't have to explain it. You guys should see. What do we look for as an analyst? What do you look for when you're trying to come up with a trading idea? You just come up with one target and say, okay, here it is. This is the place. This is where I want to put my buy order or my sell order. No, you find a spot and then you look for confluence. The more confluence, the better it is. And the more confluence that's different than, say, one indicator that measures one specific thing. You don't want 3 of those that measure the exact same thing, or 4 of those measure the same thing, giving you that because it's only really one indicator. So you want different things. I've got a very strong support. That was the green. And now I have the heat map backing it up. And you saw when I put this green, we didn't even look at the heat map. All we did was look, what do we look for? We looked at prior support. And we came up with an idea that this may be a good area by looking left and finding other confluence that is a strong area. Now we look at our heat map and there it is. Lines up perfect. That's confluence. So what are the chances that if this keeps on falling, or better yet, that we're going to come down here? We're going to come and grab that. You know why? Because price action likes to gravitate towards heat. This adds as a magnet to the price action. For those who have been following me on these heat maps, when we put these heat maps, where does the price action go? Does it go right away? No, it doesn't go right away. But you'll see it change direction and then slowly start hitting, whether it's up or down on that heat, depending on where they put it, it goes to it. So finding that confluence and matching it with prior support and looking at this fall and looking how close we are, there's a good chance that we are coming down to that 26,650 liquidity, which has a nice area of confluence of a very strong prior support. And here we can probably see our bounce. And if we, not so much of a bounce, but here we can at least see consolidation. That's going to do what? Reset that daily indicator on the MACD to do what? To get us up to that next target to the upside. Now, the next target to the upside is not going to be 48,000. Between here and 48,000, There's structure that needs to be built. There's another higher high that needs to come in. There's another higher low that needs to come in. There's harmonic patterns you can consider. There's a lot of things that you're going to do on your TA, or you can use a Fib extension. If you want to put a Fib extension to like the 1.44 Fib, that's a good extension for a follow through on a bounce off the 382 or 0.50. However you measure your bounces, whatever technique you use, or an Ichimoku cloud, a breakout of that cloud, a back to whatever the tool you use, you need to start from a certain point that has confluence and strong bias. Here, to me, looking at this, I start developing a much stronger bias that we're going to see this. Would love to see this because this will reset the MACD much quicker, but I'll take this. You know what I want to do real quick. I just don't know. Does this line up with any Fib? Let me see. Let me look real quick. Let me get rid of the indicator real quick. Hide indicators. Just let me see something really fast. And I'm going to do just on this local move. On this local move. Actually, oh shit, look, it does. 382. Actually, this was a continuation rule. I should have used that. It's the same thing, but look at that. There's 3 areas of I love seeing at least 3 of them. Number 1, prior support and resistance. Number 2, strong support by the market makers, actually by the whales, wanting to buy here, putting up that buy wall here. They want to pick some up here. That's number 2. Number 3, you can't make this shit up. It's exactly at 382. I mean, fuck. I don't want to curse in these videos because I don't know if YouTube like monitors that and is gonna ban me or shadow ban me. But I mean, this stuff should excite you. If it doesn't excite you, you're doing the wrong. You're in the wrong profession. This shit should excite you. If it doesn't, find something you love to do. Find a way to make money doing it, and go do it. Honestly, doesn't matter how much money you make, but if you don't love what you do, it's always going to be a job. If you can find something you love to do, and you can make money off of it, it's going to be a passion. Very different outcomes, very different mental approach to something that you have a passion for or that is a job in your mind. So keep that in mind, guys. I'm much older than most of you guys out there. So that's something you'll never forget that, guys. You're gonna live a much happier life. If you're young, you're listening to this, you're gonna live a much happier life if you follow that. Very, very simple advice. Okay, what else? I think that's pretty much it, guys. I mean, fuck. You can't, I mean, this is like, I just looked at my other monitors. I'm like, you know what? I think I'm just going to open, maybe not a high leverage, a short. Cause I mean, honestly, the odds of this here, it's greater. Though I'm looking at one of my monitors. Let me look in here real quick. I have this up on one of my other monitors. So here it is. Look, here's my paper trade. So it would have worked out. Okay, good. Remember, I told you I opened the paper trade here. I actually opened it on this candle, so I wouldn't have hit the top because I needed to see the rollover on the overbought conditions, and that's when this came in. That's when I opened it. I put it here only because that was the top. But in all honesty, when I saw this here, and if I would have opened it by the time slippage would have taken into effect, I would have been about right there, and that's the reality of it. I saw this. This would have been the mark. This would have been the mark of my oscillator telling me, okay, it's rolling over. By the time I hit the buy and confirm and slippage, I'm right here. And then look, it would have stayed above it. This would have been the nervous part here. You know, this is the area you're like, shit, should I have done it? Maybe I fucked up. Maybe I should have waited a little bit longer. This is the result I wanted to see. And it came through. Hell yeah. Beautiful. Beautiful. Okay. I feel much better about that. Now, let me do this here. The point of me looking at this was not for that. The point of me looking for this is now I want to look for a bearish market structure to give me the confidence to enter into a swing short for that target that we found with Confluence. Just because we found the target with Confluence doesn't mean it's going to hit. Keep that in mind, guys. That's not how it works. We do the job. We find the targets. Now it's up to the market to do the rest. And guess what? The market sometimes is not going to agree with your targets. It's not going to agree with your analysis. It's going to do the complete opposite. And you have to have a plan for that as well. So, do you see a bearish market? I'm looking at the 5 minute guy. I live in the small time frames. I'm a scalp. I scalp a lot, so I live in these areas here. So, and to me, to be honest with you guys, when you're looking for a bearish or a bullish market structure, you want to look in here. You want to look in these 30-second, 1 minute, 2 minute, 5 minute, because it starts here. It doesn't start here. By the time you see it here on the 1 hour, your prime entry is much higher. Much higher. For those that scalp and they day trade, they know exactly what I'm talking about. This gives you a safer approach. This is a more aggressive approach. But if you're familiar and if the rules that you use in your TA have been proven to work, you're going to be living inside of here. You're not going to be living inside of here in this time frame, unless you're a swing trader. You're really not. Even day traders, I can't imagine they would formulate a plan on an hourly time frame if you're a day trader. This to me is the weekly time frame. The hourly, honestly, the hourly is the macro view of what I'm going to do in here. So for those who are not scalp traders, you look at the weekly to give you the, I don't want to say bias, but the momentum of whether we're up or down. And then you look into the hour, 2 hour, 4 hour to take that trade. Now, think smaller. Hour is weekly. Taking the trade is inside of here, inside of the 1, 5, the 1, 2, and 5. The 30-second, I use it more for exits. Exits and entry, because it gives you a very quick look at what's going on. So going back to this market structure, does this give me confidence to enter into a swing short for the Confluence that we found? And the answer is no, not yet. Why? Because look what it's doing. It's putting in my favorite market structure, a double bottom, and it's a perfect double bottom. What do I mean by that? A perfect double bottom, the one that plays out more often than not, is going to be where the right side is higher than the left side, indicating the momentum is to the upside. Doesn't mean that you can't have double bottoms that are equal, or even double bottoms where the right side will have a wick. Now that wick is a liquidation wick. It's a stop hunt wick. So when those happen, those give me more confidence that market structure is going to play out. Because when you see a double bottom come here and you see it match these, so normally when I'm looking for a double bottom, if it's not higher and it seems like it's coming down here, this is what I do. I take right here on my tool, my quick one, I go here, I snap the tool, I look at that. When I see a wick go whoop, come down like that, I'm like, yes, it's going to play out. It's going to play out. You know why? Because you have to think like a market maker. And if you subscribe to HyBlock, you understand what that means, and you understand that they're trying to knock people out of their position. They're going for those bubbles, for those $40 million 100x bubbles. They want to knock them out before doing what? Do you think that they want to pay a long contract if they know this is going up and they've got all the liquidity and they know where your stop is because you're trading on their exchange? They know how much money, they know your habits. They're not going to knock you out before they go, because they know that when they knock you out, what are you going to do? Are you going to give up? Nope. You had a beautiful entry, they took it, and now you're going to buy it here. Not only did you pay them, but you're going to pay them again because now you have to pay for the fees. I mean, it's a win-win for them. So a wick to the downside on the double bottom is 9 out of 10 times. That's almost not, I don't want to say sure thing, but that's a great signal that it's going up, that it's going to play out because of that move right there. Just little things like that, guys. I stare at the charts. I literally do this 7 days a week. I know it sounds sad, but I fucking love what I do. I do 7 days a week. When you look at something 7 days a week for as many hours as I do, you look at this price action, and this isn't, I don't call this a price action. You know what I call this? A language. Just like anything else. Just like if I learned Russian or Chinese, or better say Mandarin, or anything. This speaks to me. This talks to me. These patterns are the way that the market communicates with me, telling me the probability of what it wants to do, if that makes sense. Whether it's going up, whether it's going down by putting the opposite. So if you turn my screen around and it's an M, a double top M pattern, it tells me that's it wants to go. It's leaning to go down. This is leaning to go up. If it's chopping, it's consolidating. It's consolidating for a bigger move. Is it going to tell me which side it's going to go? No, it doesn't tell me if it's going to go break up or break down. Then you start looking at other oscillators. Are we overbought? Are we consolidating on an overbought oscillators? What are the chances are going to be that's going to break out to the downside? Very good. Unless it continues to consolidate and those oscillators reset, then that same consolidation has a better chance of breaking to the upside. All this stuff takes time, guys. You need to invest in yourself. There's a lot of free information out there. You don't have to sign up to any type of service. None at all. Google Trading 101, excuse me, on YouTube. Look for Trading 101. Look on Twitter. A lot of resources, a lot of people that have a lot of free material out there. I have a Discord that's paid. I teach you this. It's paid because I believe that if you take the time to learn something and you have a good self-esteem, you're going to charge for your time. Someone who doesn't charge for the time, to me, is worthless. He's view himself as he's not worth anything. And that is, I don't know, maybe it's my age, but I have very little respect for people who don't know what they're worth. I know what I'm fucking worth. So I expect also when you give somebody something for free, they're not going to take it as serious as if they pay it. And I don't charge that much. Per day, it's a cup of coffee, $125 a month. But I'm there 7 days a week. I'm there giving you my time. I'm there giving you morning analysis on Bitcoin, on the market. We have a big community where we talk about many other subjects besides Bitcoin, NFTs, metaverse, stocks, bonds, everything you can think of for investing is on that Discord. So if you want to invest in yourselves, you can join my Discord month to month, or like I said, you can go online, YouTube. You don't need to pay anybody. It just becomes a little bit more difficult depending on your learning curve. For me, because I was older coming into this, it was much harder for me to learn by a video because I wanted to ask questions. I had so many questions to ask that you cannot do on a video. You can leave a comment and wait for the guy, hopefully, to see your comment and hopefully reply, but you're holding your breath and your journey is going to be much longer. My first course that I paid was the Chart Guys with Dan. Phenomenal. Loved his course. The only thing, I had to listen to it literally like 20 times. Again, I'm old school. I need to hear repetition because he gave a great explanation. But when you come from the street and you don't know anything about investing, anything about charting, and he's talking and he's telling you what this, to do this and this and this, and you don't even know what those terminologies are, it becomes a little bit, well, for me, it was a little bit more difficult. But once you understand it, phenomenal trader. It was worth every penny. Is it expensive? Yeah. Relative? No. I don't think it was. To some people, it may be, but it was worth it. And then from there, you start devising your own system. You start learning. You start looking for other traders. You understand the benefit of following traders you respect because you're able to come up with your own tools. Your tool set, guys, is not going to be somebody else's tool set because people view the market. Everyone views the market differently. So what tool set he works might not work for me, might not work for the next guy. But when you look at tool sets and you pick and choose which tool you relate to from different traders, you will come up with your own tool chest, with your own toolkit, and that you can understand, you can relate to. And as long as you can put that to work in a way that you can make money off of, that's all you need to do. as long as you understand it. It could be any. I've been posting about Astro. Well, my boy Astrodamus. A lot of people, they make comments about it. Guys, if it works, he called it. He said the day of the eclipse, this shit is going to drop. It has the worst aspects for the entire year. And I was, I don't have as much confidence he did. And him and I have a conversation. You can ask him on DM. He's like, I told him, I'm scared. I don't want to say the bad word because, again, I don't want YouTube to ban me. But I said I'm being a really big PUS right now. I don't want to take this short. It just, I don't see that the strength it's a little weak, but it's not. I still feel like there's a lot of momentum in the market. He says, trust me, just take it. And because I've seen it play more often than not with him, I said, you know what? I'm gonna go ahead and trust you on this one. I'm gonna take it. Damn, I gotta give him credit. I'm one of those people, guys. I have to give credit where credit is due. I'm not going to sit there and act like, oh, it was my idea, and yeah, I'm such a great trader that I just knew it was going to drop. No, I was scared to take it. His confidence and his conviction helped me to pull the trigger. Now, if it wouldn't have went my way, I'm not going to blame him. I told him that, look, I'm a grown ass man. If it doesn't work out and it goes the other way, it's okay, no big deal. But it worked out. It worked out because he understands his toolkit. My point is, find the toolkit that you understand, that you can relate to, and you will be on your way to being a successful trader. And a successful trader isn't a trader that doesn't lose. Remember that. It's a trader that can manage his losses and can manage the psychology behind losing money. It is not easy losing money. But you're gonna have to learn to deal with it. If you can't deal with it, this game will chew you up. All right, guys, everyone have a really good day.